name's David Buckland, and welcome to this series of interviews with the Montgomery Small Companies team portfolio managers. Today I'm being joined by Gary Rollo, and today we're going to talk about the decarbonisation of the world economy with a focus particularly on lithium and copper stocks. Just to start with some context, the Montgomery Small Companies Fund has been around for 22 months, and in that 22 months it's turned $1 into a little over $1.53 after all expenses. In fact, just recently at the 30th of June, it paid a 7.9 cent distribution. So to those that see it, the unit price is approximately $1.45, $1.46 on an ex-distribution basis. Interestingly, the benchmark, the All Ordinaries Small Index, on an accumulation basis, has turned $1 into less than $1.23. So $1.53 versus $1.23, Montgomery has outperformed by over 30% over the 22 months under review. Today, Gary's going to talk about two stocks, Aeris Resources and Pilbara Minerals, which make up two of about 6 or 7 stocks in the decarbonisation space. These two, on a combined basis, account for a little over 5% of the Montgomery Small Companies Fund. Over to you, Gary.
Thanks, David. So today's discussion is about decarbonisation with a focus on lithium and copper. Well, let's take them one at a time. We'll start off with lithium and then end in that section with Pilbara Resources. So what's going on? Well, lithium is clearly a feedstock element into the batteries that will go into electric vehicles. And the big change that's happened has been because the Europeans, the Americans, they've obviously decided to put some stimulus in place that incentivizes consumers to effectively move from internal combustion engines to electric vehicles. And obviously all of those feedstock elements that go into that get lifted by that. We're very fortunate here in Australia that we will be forming a big part of the supply chain that goes into that big mega trend change. So this isn't a short-term event. This is something that will be happening for multi-years, multi-decades, because there's a heck of a lot of internal combustion engine cars out there that are going to be effectively changed over time to electric vehicles. Now, that's the tailwind. Let's get down to the sector specifics. Here in Australia, we can invest in stocks in the lithium space that generate the feedstock required for these electric vehicles or these batteries from two sources, brines or something called spodumene, which is a hard rock mined in Australia. Now, we can invest in both sides, but the focus of the portfolio today is on those stocks that we can invest with their assets here in Australia, those spodumene or hard rock inputs. And Pilbara is an example of that. And what's really changed in the market that's making these spodumene related stocks interesting is that in the past, in the previous cycle, all of those miners of spodumene had to send their product off to China to get refined from the underlying commodity into something that could go into a car battery. Now, in the past, the Chinese controlled maybe 80% of that refining capacity. And what's happened now is those Western countries that I mentioned earlier have made it clear that they want to move to electric vehicles, but don't necessarily want to depend upon China as a source of control over that supply. And so the Western Australian miners have all started to build that refining capacity next to their large mines. What that means is there's less spodumene that's unspoken for that would go off to that refining capacity in China. And if there's less supply and more demand, then guess what happens? The price goes up. And so we've seen spectacular changes in the pricing for this feedstock input, as there's simply not enough to go around. And we expect that profile to be in play for quite some time because the supply side of the industry can't react as fast as the demand side of the industry is absorbing this supply. And one of the beneficiaries of that is a company called Pilbara Minerals, and that's a stock we've held for a fair little while now. It's got an enormous endowment of this mineral spodumene. It's got around 270 million tons at a 1.2% lithium grade, that over the course of the next 30 years, it will produce this. So at the moment, they're producing at something like 80,000 tons of spodumene a quarter. Over the course of the next few years, they're going to be producing 1 million tons a year. And so this thing's got a very long mine life. And those are the types of assets, quality assets, that we like to invest in. And that's the story of why Pilbara has done so well over the course of the last little while, because effectively the fundamentals in the lithium sector have tightened up, and the commodity that Pilbara produces has been in demand in the near term, but we expect will be in strong demand over the medium term. Now, the story of the other side of the electric vehicle investment thesis that we're playing in copper is a little bit different. Copper is already a big market. And as we know, the input that electric vehicles require from a copper content is about 4 times what a normal standard petrol car would require. So every time we're switching an internal combustion engine car for an electric vehicle car, the impact is about 4 times what transportation currently is in the copper market. So today there's about 24 million tons of copper produced in the world. And over the course of the next 10 years, we're going to see an extra 15% demand come from that electric vehicle switch. Now, copper is a market that has struggled to grow supply over the last decade because, quite simply, the easy stuff has been found. And we anticipate, once again, that lack of supply flexibility can't move as fast as demand is growing, will cause the copper price to be quite resilient and strong. And so what we've looked for in our investment opportunity, our landscape, is a company that's in production where that strong copper price hadn't been discounted in. And that's the story of Aeris Resources. Iress, not that long ago, and Buck, I think you wrote a blog on this, was trading at about 3 cents when we got involved. Today, if I had the price right, it's north of 20. And that's largely been on the back of an improving copper price and what those sector fundamentals have done to the ability for Iress to invest in its business. Because when the copper price was low, the business was making no money. And being a miner, you need to invest in the future before you can deliver your tons. And what Iress has now been able to do with this windfall profit event from higher prices is take that money it's made and start investing in its ground again. And it has found a very significant copper deposit on its ground. And what we think that deposit will do is it will extend the mine life. So this is the infrastructure that Iress already has. It had possibly about 2 years to 3 years left of reserves left at its mine. This incremental deposit that it's found, we think, will probably extend that to something like 6, 7, maybe beyond that. And that dramatically changes the valuation regime that a business like Iress can sit in, alongside, obviously, the dramatic increase in profits. So we don't think that story is over yet. We think some of that valuation regime re-rate is still ahead. And so that's why, on the one hand, Pilbara's in the portfolio benefiting from the spodumene price, but also Iress is in the portfolio because it's there to benefit from the copper environment, but also we think a re-rate of the business as the market appreciates that its mine life is going to be a lot longer. And that's really the story of our portfolio and how we've decided to expose that to the electric vehicle theme, which we think will be a theme we'll be investing in and boring all of our investors for over a decade, Buck. This isn't a short-term thing.
Thank you for that, Gary. Well, there you have it. The global electrification of the motor vehicle fleet. Isn't it an exciting tailwind? And as Gary says, it's going to be around for 10, 20 years. And we're in on the ground floor with both Pilbara Minerals, PLS is the ASX code, and Aeris Resources, AIS is the code. Thank you very much, ladies and gentlemen. That's the third of our series of interviews with the portfolio managers from the Montgomery Small Companies team, Gary Rollo and Dominic Rose, and I really appreciate your time.